Okay, folks, welcome back. This teaching is going to be specifically dealing with trade psychology and effective journaling. Okay, trade psychology and effective journaling. The points of focus in this module: major psychological barriers and my personal opinion and solutions for overcoming them, and effective journaling, how journaling can assist your development. Okay, so major psychological barriers. The first on our list is the fear of missing moves. And I believe this personally is rooted in not fully understanding what your setup is. Now, you see this glibly tossed about in seminars, webinars, videos, whatever it is, folks that are teaching today. Many of them aren't even qualified to be in the role of a teacher, in my opinion, but we'll leave that for another discussion. The fear of missing moves is rooted in your unique setup. Now, every trader is going to have their specific setup. It may or may not have an indicator. I personally don't believe that indicators should be a part of your trading, but that's just my personal taste. My faith in price action is sufficient enough. But if you have a tool, if you have a method, if you will, that relies on an indicator to give you that buy or sell decision for you, then whatever it is, you need to stick with it and know that that's the one you're going to trade. If you have defined that setup in a written form, in other words, a trading plan, you're not going to have many times that same feeling a neophyte trader or a less organized trader would have. Now, it doesn't mean that we're going to be profitable. It just means that we're not going to be fearing missing a move. Because once you understand the setup should be directly linked to time and price. There should be a time when this setup forms, and there should be a consistency to it. If your pattern doesn't have that and it's rather ambiguous or untimely, you don't know when it's going to happen, then you probably don't have a valid setup. And you're going to have hit and miss results, and when it wins, you're going to falsely attribute it to your setup when it's really just randomness. So to overcome fear of missing moves is obviously to have a well-defined plan and what your setup is. Knowing it intimately will keep you far less anxious about missing a move because you'll know when they're most likely going to form. This is why I use kill zones. This time element of the trading day, I know what I'm looking for. I know my setup. And if I know what time it should occur, I know on what days of the week it should form, and I know it should be either a bullish model or a bearish model, I'm not anxious about missing a move. Even if I do miss that trade, I know when the next one's going to form. Most neophyte or novice traders do not have that luxury. They're on the seat of their pants all the time, not knowing when it's going to happen or what it is that's supposed to happen at all for them to take a trade. Fear of losing. Well, this one's going to have you looking for systems that have high accuracy, and there's not a real need for high accuracy. It's wonderful to have it, but the fear of losing comes by not having a plan. And if you don't have a plan, if you don't have a method that's seen consistency in hindsight and back testing, and then walk forward with it, seeing it working and then having momentary lapses of accuracy, you will not have the wherewithal that's necessary to do what is necessary as a trader. That means embrace uncertainty. The ability to do this is not going to be for everyone. And there's going to be a fine line between those individuals that hit this wall that every one of us will hit, and we have to determine for ourselves if this is really right for us. And for some of you, it isn't. No one's going to be able to make that decision for you. but it's important that you understand that there is always that element. If you're a new developing trader and you're unproven, it may be that trading isn't for you. You would have to more or less rely on someone else to do the trading for you, or don't trade at all. But if you're going to trade, you can't fear taking a loss. Fearing a loss is many times directly linked to over leveraging and or over trading. Both of those two elements are very easily fixed. Lower your leverage and you won't be so fearful about taking a loss because it won't hurt you so many times in a row if you have a losing streak. If you slow your frequency down in terms of your over trading, again, even if you're not trading a high accuracy method or setup, the high frequency won't be quickly eroding your equity. Very simple solutions to an otherwise rather routine problem that comes up in many traders. Impatience between setups. This is going to come by way of infancy as a trader, especially if you have a setup that is profitable and you can be well organized, you can have a well groomed money management strategy, and you know what your setup is, but you're impatient in waiting for it. Or you see the setup forming, but you're trying to get in just before you're really supposed to. In other words, you're looking for a specific level, you're looking for the 50 level to be buying at, and it's flirting with 65 and you just can't stand it. You just got to get in. That's going to be dealt with over time and forging discipline by following the rules in your method. The problem is you don't have the time doing it enough and the experience trading to know what this is going to require of you. And you're going to have many times previous exposure, either by demo preferably, or if you eventually go into live trading, which I don't ever try to tell anybody to do that because it's a decision that you're going to make on your own if you ever do it at all. But if you find success, that feeling or that rush you get when you make a profitable decision, you want to have it right away, as quickly as possible, and many times immediately. As soon as you close the trade or it hits your limit order and you're out with a profit, whether demo or live, worst case scenario, it's a live, you're going to want to go right back in again, and you're going to jump in before your setups. And you're going to take things that aren't your setups. And I can tell you as a commodity trader, when I had initial luck back in the early 90s, I would have an idea what I wanted to trade, but I would also feel that impulse to want to get back in and be a winner again. So I would look at the market and say, okay, well, that's not my setup, but I still think it's going to go up. And I would buy it. I had no idea what I was doing, but I still succumbed to that impulse that, hey, look, I need to be doing something because I'm sitting in front of the charts and I want to feel good again. So let me roll the dice and see what happens. That impatience comes by way of your infancy and your lack of experience. Experience is going to teach you one of two things. One, that losing sucks, and it's better that you try not to lose too much when you do lose. Or experience is going to teach you that you're not perfect. So therefore, you have to wait for the best scenarios for your quote unquote luck to be in favor. We don't know if our setups are going to be accurate, but we also don't know if our setups are going to come when we're expecting them to. So forcing it or jumping ahead and more or less anticipating the setup, whereas we're anticipating the next move in price. That's what trading is. It's a statistical guess. Now, with that, there's a measure of uncertainty. And that uncertainty and the waiting side of trading, it's just like a water torture. Okay, you can't stand it, especially if you're sitting in front of the charts. You just want to get in the trade already and accept the wider risk if you need it. And that's wrong. You don't want to do that. Demand your price, demand your setup, and by doing so, you'll combat that impatience that resides between setups that novice traders always feel. Fear of not being good enough. Well, this is a byproduct of being on social media. Everyone's going to be better than the next guy, or they're going to be trained by the person that's leading the pack, or they themselves are, the rock star. If you are not equipped to handle the tomfoolery that takes place on social media like Facebook and Twitter and Instagram, it's probably better for you not to be on it. Now, I understand that I have a online presence on Twitter, and I have a Facebook, and I have a YouTube channel, but I have a thick skin and I like to engage other traders because I like the feedback. I like to see what their responses will be, and I just like the engage. So if you are quickly feeling like you are not sufficient, or your learning speed is not up to snuff in terms of what you've seen other people, and many times what you see online, they're lying anyway. They may say they have their things together, they're all, completely figured it all out in terms of what they're doing. Many times the ones that are saying that aren't really as astute as they claim to be, and they're trying to fake it until they make it. So don't let it wear on you too much, or make you feel like you're insignificant in terms of where you're at in your development, because your report card on your own results, as you'll hear me refer to in the journaling section of this video, that's the only opinion that matters. It's not mine or anyone else's that matters. It's, are you seeing development progress? And by measuring that and by keeping tabs in that in terms of your journal, that's the scorecard that really matters. And obviously your bottom line, that's the one that really makes the case for whether or not you're developing. So fear of not being good enough is simply a game that's between your ears. It's all a trap. So don't think about being on social media. Don't engage other people, especially if you're a developing trader. The worst thing you can do for you men is to go into this arm wrestling match about, what's better, who's better, how much is, a good amount, and what you should be making in terms of pips. All that stuff goes back to the proverbial measuring contest. Who's the bigger man? And it's not about who's the bigger man. It's about surviving long enough so that way you can appreciate and develop as a trader. Fear of losing streaks and drawdown. Well, this is going to be directly related to money management. And if you're afraid of taking losses in any set or series, and or fear drawdown, it's because you have no process or protocol in place, or what you would reach for should you have a loss or a losing streak develop. I've given you a teaching to help you flatline your losses, so that way it removes the effects of drawdown in your losing trades. And by implementing something as simple as that, quickly changes your perspective on fear and anxiety about taking losses or a string of losses. Lack of discipline and following rules. Well, it's in our nature to be human, and I've said this many times. If the sign says don't walk on the grass, your first impulse is going to be what? I'm going to tap dance all over that. So, just like your children, God bless them. I have 4 boys, and I have literally watched them do these very same things that they should know not to do, but they still do it. Well, with an account, with money, or a demo, we do those same things. We know we shouldn't be doing something, but because there's an opportunity to do it and there's really no one keeping you from doing it, you end up doing it. And as soon as you enter the trade or mess around with your trade like you shouldn't, as soon as you do it, that little voice in your head says, I should not be doing this, or don't do this. But you ignore it. You want to see what's going to happen. And if you want to do experiments, okay, do it somewhere else, not in the marketplace. But you have to have discipline and you have to have rules. And when those rules are made, you have to stick to them. Do not deviate from them. And over time, this forges discipline, and it'll also serve you well, because you're going to have periods of drawdown. You're going to have periods of losing trades. And if you don't have the discipline to stick to doing the very things that will eventually lead to longevity in this business, you're not going to fare well. So discipline comes by forcing yourself to follow a set of rules, and those rules have to be rigid, they have to be concise, detailed, not ambiguous. They're very binary in the sense that you do this or you do that or you do nothing at all. And they have to be three conditions for every decision making process. Either it's a go, it's a no, or you sit still and you don't do anything. Searching for the next best thing. I think this is one of the biggest problems. If you just look at Twitter, whoever's hot right now, whoever's got the most attention by everyone, that's where everyone's going to flock. Okay. And it's always been like that, not just in trading, but in anything. Okay. Whoever's barking loudest draws the biggest crowd. Now, whether or not they have anything to say once the crowd gets there, that remains to be seen. But you can see how folks that are in love with one concept or one guru or method this month will change teams and go somewhere else in the thought process, thinking that this is the better way of doing it, or this is something different and it's amplification of something. And I have learned that there's nothing really better for me as a trader, so therefore I don't look anymore. I know everything I need to know in terms of price action, the open, high, low, and close, tells me everything I need. There isn't anything out there that entices me personally. And like the Bible said, there's nothing new under the sun. So if I have arrived at something that makes sense for me, even if it's not perfect, I don't need perfect, but I know I have a statistical edge in the things that I do. They're highly accurate, they're very precise, and they're time based. I know when my setups are going to form. If you were able to poll the majority of individuals that were trading any asset class, if they could set a time on when their next setup is going to be, over 90% would say, I don't think so. I don't think I could do that. And that's why trading's uncertain. To me, it's not, because I know what time of day certain things should happen. I know what days of the week certain things should happen. So therefore, I'm not anxious about when my next setup's going to be. I don't care about missing a move. In fact, it's fruitful for you to take vacation time, scheduled time away from the marketplace, and do that. And I would suggest to do that even more so if you're hot right now. If you're doing really, really well, best thing you can do is forge development in terms of your discipline and also your experience. Force yourself to say, okay, I'm taking a break now. I've been killing it. I got 25 winning trades in a row or whatever it would be. I'm going to stop trading. I'll take a week off. Don't even look at the marketplace. You're going to want to look at it, but don't. By doing that, you're going to prove to yourself there's nothing better than the thing you're doing right now because you understand it. It doesn't have to be my material. If you found something in another discipline that you've really gravitated towards and it made sense for you to use it, great. That's awesome. That's all that matters, is that you find something that you can make a wager on and then wager that with sound money management. Because ultimately, no matter whether we're talking about order blocks or ICT breakers or anything else that's out there, none of that stuff really makes price move. And we can't control price once we're in the trade. Once we're in the market, all of the control, the steering wheel is not ours now. The market's driving what we're going to see in terms of profit or loss. So understanding that everyone's going to have losing trades, and the first thing that happens is folks that go through a losing streak and they experience drawdown, then they show their lack of discipline and following rules, so they think there's something better out there. Okay, something easier, something that doesn't have losing streaks. Everything has losing streaks, folks. Believe me, everything does. No one stays hot or the top forever, and there's always going to be some measure of drawdown in whatever system or method you're using. So the best thing you can do is find something that works enough time to warrant investigation and stick with it. Use sound money management, and you can turn it into something really impressive, and you may even surprise yourself. Okay, effective journaling. When we talk about doing journals, every single day I make a journal entry in my personal journals. And at the end of the week, usually it's on a Saturday, I do a weekly log in, my personal performance and what I have seen happen in the previous week. More or less, I'm reviewing the total week's range. And I do this on the two pairs that I trade, which is predominantly the euro dollar and the cable pound dollar. I don't do a lot of trading in a lot of other pairs. If I want to be a deviant, I will trade sometimes the Canadian dollar or the Aussie dollar. But generally, that's about it. I don't like to do anything more than that. And the reason why is because I actually spend a lot of time planning and investigating certain setups and things that I'm looking at. And I want to go through that time and use that time the most economical way I can. And I don't want to be doing that with 28 pairs. So if I'm going to put the time into doing a sound top-down analysis and or review of my own setups, if I'm following 28 pairs, can you realistically do that every single day? You're never going to have any time to do anything else. So I have a life to live, and I can find all the setups I'll ever want to find in these two pairs. In fact, I could just trade one, but because they're closely correlated and it fits my model as far as a short-term and day trader, I look at both Eurodollar and cable. And if I want to find something else that may or may not have a setup in the cable or fiber, then I'll trade, like I said, the Loonie or the Aussie. But I try to make a daily entry, whether I take a trade or not, and I give myself an opportunity to stay in a routine. But every single week, I'm doing a complete review of the weekly performance as my trader half of me has performed, and then the analyst half of me. So I'm always giving a voice to the two people that reside in me, just like you are. You all are going to be looked at internally as a trader, but there's actually an analyst inside of you too. And there's also a gambler. So you have to figure out who's in control at the time when you're doing the trading. And many times you don't see it before you go into the trade. You always see it after the trade. Okay, the ones that pan out really, really well and you're not feeling a lot of exposure to uncertainty or fear and anxiety, generally you're going to find that that's going to be the analyst because they're focusing on the numbers and they're not really worried about it. The person that finds themselves excited about the results many times when they're good, or I guess the adverse side of things, they're weighing things in terms of the outcome. That's the trader. And then you have the gambler, where they're impulsive. They're doing things that are undisciplined and they're pushing more leverage than they should. That's the one you want to keep your eye on, okay? The gambler's going to get you in trouble. The trader will take care of himself because the analyst will speak to that side of you through your conscience. But you want to reside in the mindset of the analyst, sticking to what you see in the chart, sticking to what your process is, your model. Okay, the analyst is what's going to keep you on the right path. That formation that makes a trader is it's made up of three people, but you're all the same person. The analyst, generally they're the ones that are the most sober minded. The trader is the one that wants the opportunity and the right or wrong measurement. But then you have the gambler who wants the thrill of it all. And it's also going to be the person that takes the hardest in terms of the grief that comes when there's a losing trade. And that part of you is going to always be negative. It's going to be, well, it's not my fault. It's something else that caused that. The gambler is only going to be worrying about when it was right and when they made money or when you made money. When it was in your favor, that's when you want to consider it. But when it isn't making money for you, the gambler is going to cry. It's going to manifest itself into a spoiled perspective, toxic thinking. So you kind of like want to keep that side of you on a short leash, and you don't want to allow it to manifest itself in your journaling. How you felt going into the trading day is really important. Um, there were times in my life as a trader that my oldest son would have to go into surgery. And I wish I would have stayed out of the market those days because I was already anxious. I was already nervous about the outcome of the surgery. So those are days that I wish I would have had the discipline to not trade. But because I was feeling anxious and helpless because I couldn't do anything to fix my son's ailment, I would try to satisfy my anxiety by having a win. Because even if I made $100 doing something in the marketplace, it would keep me distracted from what I was feeling in my personal life. So you're going to see that your losing trades are going to be directly related to things that are going on in your personal life. And the only way you're going to see that trend or that truism is if you go through your journal and you index all of your trades based on a negative mindset, or if you're sick, if you're physically ill, probably not a good idea to trade. If you have a migraine, like I have migraines sometimes, and I have made the mistake of sometimes still trying to take a trade. And worst decision ever, because there's nothing worse than feeling like your head's going to explode. And I already have sensitive eyes, so I can't look at the chart long to follow out what is the best procedure for me right now. Should I stick with the trade? Should I move my stop? Should I do anything with it? When it would be better for me just to not to be in it at all and just relax and go to a quiet, dark place in the house and just relax and let my migraine take care of itself. So how you feel, okay, and this is not only physically, but how you feel emotionally. Did you just have a death in the family? Worst thing in the world you can do is medicate yourself by rolling the dice. You just had a loss in your family, or you and your spouse you're separating, God forbid, or something terrible happens. Okay, you don't want to open yourself up to gambling. Okay, because that's what it's going to become in those environments. You want to be relaxed. You want to have a neutral mindset going in. You want to feel healthy. That's why it's important to have a good exercise program, good healthy diet, and staying active and stretching out and giving yourself hobbies outside of trading, because you want to have a fresh perspective. You want to have a alert mind. You want to have a healthy fed body going into the marketplace with a sickly, unrested, which I didn't mention before, but sleep is important. You need to have it. Um, Especially if you have jobs and businesses, you need to recuperate. I've been blessed to not have to need those things because I'm home most of the time doing whatever I want to do. So sleep for me isn't as needed versus someone that has a business and you know doing all these things or has a job and they have to commute. I mean, commuting alone, okay, if you're rushing home from your job, and you had a bad experience on the road, you're angry. So what are you going to do? You're going to want to take it out on the marketplace. You're upset. So you're looking to have that replaced by some kind of a feel good feeling. And what better feeling is there is to make money? Okay, it's like winning the lottery. So you're going to do things that you shouldn't do because you're acting impulsively because of the way you feel. So it's important that you always be honest with yourself when you journal. I always give myself an opportunity to debrief, okay, and also release those things. And it's almost therapeutic because you know what you're doing is the wrong thing when you do it, and you're acting impulsively because you want to have a different feeling than whatever it is that's bothering you. Okay, if you're stressed, or if you're worried, or if you're angry, you just want to replace that with something. Okay, and since we're traders, we can clearly see that there is a reason to expect the market to go up or down. So all we have to do is roll the dice and just gamble and see what's going to happen. And our attention will be diverted from whatever the things that we are stressing over or anxious about or mad about or sad about or fearful of. All those stimuli will be replaced by I'm in a trade. And I made the mistake of doing that as a young man, and it filled my head up with all the wrong things as a trader. So the way you want to avoid that is be sober minded going into the trade and also know what it is you're feeling. At the end of the day, when you're done trading, you want to put that into word and write it out and be honest. Don't, if you know you were angry at your spouse, or if you're angry at your child, or if you're worried about something that's taking place, if you have a job, if you're anxious about losing your job, or if you're angry that someone else got a promotion that you didn't get, okay, make sure that you do that in your journal by allowing it to come out. Because if you don't release it and put it in your journal where you can see it in text, read it and release it. If you don't do that, you're going to harbor it and it's going to become cancerous to you as a trader. It's going to infect your mind, it's going to infect your performance, and it's not going to always be what you want. Okay, it's going to be many times the opposite of what you're expecting, and it's going to have an adverse effect on your overall development. Okay, you want to record any of your concerns or fears that you had while you're watching price action. So if you're in a trade or not in a trade, whenever you feel a sense of anxiousness or not trusting the setup, these are beautiful opportunities for you to learn, because that's when you want to be doing screen captures. Okay, if you're in front of the chart, you have the luxury of being able to do that. Screen capture that very moment. And then in your chart, you want to make a notation of what you're feeling and what you're thinking at that time. You may be feeling that it's going to go up, but it's retraced a little bit deeper than you thought, and you're starting to have anxiety about it. It may not pan out. That's a time when you want to screen capture and make that notation and log that. Keep that as part of your journal entry. Each time you do this, you're going to find that you're going to find less sensitivity or emotional attachment to these ideas because you've been there before. And yes, you see that there may be a opportunity for the trade to fail and hit your stop loss. But if you stick with it, how many times did it really actually go there? And that's the benefit of keeping a journal, because unless you write the things down and keep a journal of what the charts look like and what you were thinking, you're never going to remember them. You're going to remember that really good trade, and you're going to try to forget with all of your energy and effort and might to forget those trades that you should have never been in. You knew you were getting into it, and you should have never done it, and now you're going to do your best to try to avoid it and forget that they ever happened. And they're your lessons. That's what you want to learn from. So journaling is absolutely crucial to your development as a trader, especially if you want to be organized and you want to be collective and calm about what you're doing. That only comes by doing this exercise here, journaling. Every professional, whether it be a doctor or a lawyer, physician, psychologist, the long and short is they keep good records about what they say and what they have done. They do not want to rely on their memory. And you can't rely on your memory. You're going to forget things, okay? Every 7 years, your brain breaks off this little nodule, okay? And part of that, you lose memory. So it's important to keep a record of things that you've said and done, because when you have these adverse times in the future as a trader, because you're going to, you want to be able to go back and reflect on those times that you forgot how you've been through that before and what you did to go through it's important. Contrast your personal expectations of what you thought was going to happen in the marketplace and how you were going to do versus the actual result. This is where you get to be more or less the scorekeeper. You're able to soberly and balanced give an opinion about what you did in terms of your analysis going into the day or the week, and then what actually happened. Now, you're not in this section of journaling to beat yourself up. That's not what this is. But what you're trying to do is highlight the things that you missed. But you don't want to draw so much attention to it that it seems like you're writing, a suicide letter. Like, I'm no good, I'm this or that. What you want to be doing is highlighting the opportunities for you to develop better or spend more time focusing on in your weaknesses, because that's what journaling helps you do. It identifies your weaknesses. If you were honest with yourself, you probably would have about 10 things that you could list as a weakness. But you're probably going to have 4 to 5 times more than that you won't really readily discover until you go through the journaling process. And it's not something you do for short term and then you abandon it. You always do this. I've been doing it for 25 years, and I did journaling before that and other things in my life. So to me, it's something I've always done, and you don't need to spend a whole lot of time doing it, but I've always made a reference to what I've done or said in the previous day at the end of the day. In other words, I'm looking back in reflection. Otherwise, if I try to go to bed, my mind will not allow me to because my mind's going to race. I should write this down. And many times I have tried to go to bed, even after journaling, and I have something on my mind. I can't do it until I get up and I write that down in my journal because then I've released it. And the only way you're going to trade with a emotion free or as close as you can get it and a balanced mind is to have a clear conscience. Anything that's bothering you, you release it into your journal. Your journal's not going to call you a name. It's not going to say it wants a divorce. It's not going to say you don't love me enough or you don't spend time with me enough. Okay, it's only going to say what you write in it. So when you go back to it, it's going to say the words that you put in. So it's important that what you put in it is going to benefit you, but you're not sugarcoating it either. So you want to be honest about your evaluation about what you did or thought going into the day or the week, and then what the actual results were. Keep it simple. All you're doing is this is what I thought, and this is what actually happened. You're not using adjectives. You're just stating the facts. This is what I thought was going to happen. I thought I was going to go here. I thought I was going to have this effect. I thought I was going to move this much. And this is what the actual result was. And you're not adding anything to it or attaching any emotionalism to it. Okay, you want to detail where you felt uncertainty, and this is important, how you actually coped with it. You're going to find that many of your coping skills for stress aren't really coping skills. They're actually feeding that emotional stimuli, and it creates even more stress. The only way you're going to find that is by actually recording it, writing it down, and you may be in a trade and it may be flirting with your limit order. You've already had your profits taken for the most part scaled out. Your stop loss is trailed up now, but now you're feeling like it's going to hit your stop and you're not going to get that last piece of the move. What are you doing to cope with that? Are you staring at the chart screaming, or are you taking a walk, or are you turning the computer off and then saying, I'm going to see what happens at the end of the day? Come hell or high water, it's going to take my stop, or it's going to take my limit, or it's going to trade sideways until the next session, and then whatever it's going to happen is going to happen. Whatever that coping mechanism is that you've used for that stress trigger, you want to include that because it's important. The ones that do not work, you're going to see. And that way, when you start feeling that stress trigger come up, you immediately discount that thought process to follow that same regimen again. If it's something that hasn't worked in the past and it's maintained a stressful level, and you're wanting to think about it or do that same thing again, like smoke cigarettes, okay, or grab a drink that's alcoholic, those things you may feel like they're soothing you, but actually they're not. So what you want to be doing is focusing on when the coping mechanism that you've used to get through that stressful environment, when it helps you, it's highlighted on an opportunity for you to use that in the future. And here's the thing, many times I've learned coping skills that were in high stressful events through trading. When I had stressful events in my personal life, I used those same coping skills. So, for instance, while I'm trading, I usually have a deck of cards in my hands. I'm a fidgeter, okay? And now they have these things called these fidget spinners, which I love them. I absolutely love them. For me, it keeps me distracted from worrying about what the next move is going to be in price. I'm allowing my method to pan out and do what it's going to do. Before I did that, I used to have a coin. I'd always keep a coin in my hand, and I'd either roll it through my fingers or I would just keep it pressed in my palm, and I would just practice palming, okay, because I'm somewhat of an amateur magician. Nonetheless, I would do those things to keep me distracted and not being hypersensitive to every fluctuation in the marketplace. So, whatever the coping skills are, okay, that you find work in the high stressful environment of trading, I found that they were just as equally effective in high stressful environments, like when my son was in surgery. I would take a deck of cards and I would fidget with those, or I would have coin in my hand, and it would just keep me distracted enough where I had to go through that experience. I couldn't escape it, just like you can't escape the trade unless you just kill it. If you're going to take the trade, you have to go through the trade. Either it takes your stop or it takes your limit. But you have to submit to that. So whatever it takes for you to submit to that, over time, these coping skills that you will find that there really isn't a this is what you do, because it's only going to work for you when you discover it works for you. It may be something as simple as having something in your hands to fidget. It may be something that requires you to completely step away from the charts and grab a book. My mind personally, I can't read if I'm in the market. I can't do that. I have to read when there's no one talking to me and I have complete silence. So whatever those things are that you discover through journaling that help you in your trading, don't look at it as that's your fix for trading stress. Many times, if you apply it to your stressful personal life, it fixes it as well, which many times is that's a plus. You want to use positive words for the things you did well on. You don't want to sugarcoat it. You don't want to say, yeah, I'm the best trader in the world because I did this. But you do want to say, I'm happy with my execution with this trade because I did this and I had that in mind and I did exactly as my plan outlined and I did not deviate. I'm glad that I used the 25 pip stop loss and didn't try to get short and sweet with it with a 15 or 10 pip stop. I followed my rules. Regardless of what the trade was doing, anything that you did that was predetermined and you follow through with it, you want to record that in your own words and use adjectives like happy or pleased or proud. Okay, those types of things because your mind's going to retain that. And when you go back to it, this is where it's important. When you come back to your journal and you read those things, you certainly don't want to litter it with things that are just going to be mundane or not impactful. You want to be, well, you want to cheerlead yourself basically because there's going to be times when you're going to go through periods of drawdown and it's going to feel like trading is the worst thing you could have ever done. So you want to have that old friend of your conscience to feel soothed when you read your own words in your journal. You don't want to read it like, well, I really didn't feel well that day and I'm lying to myself in there. You want to be honest, but you also want to be, well, you want to be comforting to yourself, but you don't want to sugarcoat and you don't want to embellish and lie about how you did something right when you really didn't. You want to be accurate about what you're describing, but you also want to do it in a positive light. And here is the kicker. When you do things messed up, okay, and you do the wrong things and you make errors, you want to avoid negatively charged words. Wherever you struggled in the execution or the application of money management or your leveraging, or if you overtraded, you do not want to say, oh, I'm a stupid so and so, or I am a failure, or I'm never going to get this. Do not do those things in your journal because your mind will latch onto that. And whatever you use negative words on, your subconscious is going to see that and say, okay, well, this is a problem or it's a source of stress, so I'm going to avoid it. So what's going to happen when you look at the charts? Subconsciously, your mind's going to say, this is stressful. I want to avoid this. And you're not going to pay attention. And or your mind is not going to let that setup jump off at the chart at you so that way you can engage it properly. So it's very important not to use negative terms. So while this is not an exhaustive list, I wanted to have some measure of journaling suggestions and I wanted to have some measure of psychological um, well, solutions. And both of these topics can be really explored in greater detail, and it comes by personal experience. And while there's a lot of books written about both the subject matter that I mentioned here tonight, I don't think it's something that you need to make any more complicated than what I have here, because this is really the bare bones of what I've done for 25 years. And the best trading book out there is the one you're about to write in your journal. That's the best one because they're going to be directly related to you and your own experiences. You can't teach your experience to someone else. You can talk about it, you can share it, you can share your journal, let them read it, but it still won't have the same impact that your experience has for you. And that's the wonderful treasure and, well, secret weapon, if you will, of a trader by using a journal. It seems like extra work. It seems frivolous. Oh, I got time for that. Who does that? Well, I'll tell you who does it. Winning traders do it. And we know what we're looking for because we've studied it. We've had days and days and days on end where we have recorded the same exact setup, the same winning attitude that we went into is always there. So these are all signatures, these are hallmarks of classic setups. So that way, when you start feeling a certain way going into the market day, if you're not on, you'll know it and you'll be honest with yourself and say, okay, I got to not be in the market today. I got to take a day off. Otherwise, how would you know those things? Because you're going to talk yourself into taking a trade if you're feeling bad. That's the normal response for a human. Distract me. I need a distraction. Well, what's a better distraction than getting money? Nothing. So you want to play the lottery. It's time for casino. So many times that results in a negative uh, withdrawal from your equity, whether it be demo or live, and we want to try to avoid those things. Okay. So what type of things do we look for in terms of adding charts to our journal? And then we can go to the charts now and I'll give you some suggestions. All right, so this is the Canadian dollar. This is the daily chart. And this particular week, I was looking for the market to want to run above those equal highs. And I have that actually in recording, so you can go back and look at that. But we have double tops, and a third time the market trades up to this same level. So we know that this is too clean of a level. We had a nice rejection down here, so market's most likely going to want to push above this level. Now, if it's so clean like that, what's the most likely outcome should it trade to that level? A blast off and continue higher, or a retrading back down into the range? Well, look what's happened. We've had a sell-off. People have made money. There's another sell-off. People have made money. And now we're going right back up to those levels again. So to take those individuals out or put new traders in on the wrong side buying, the market's going to want to push up there. So in your journal, when you start seeing these things, you want to print out your chart or screen capture it. And in your notations, you want to write down what you think is going to happen. What's the most likely outcome? Okay, so that way you have a condition, that way you can weigh it against what actually happens later on. But you want to build the context in your chart and your journaling, so that way when you go back and look at it, if it pans out well, you're going to be encouraged in the future when you have periods of time when your trades don't actually pan out. Okay, and soon as the event that you've been waiting for occurs, like I share a lot of my trades at the time of the setup or the confirmation, if you will, of whatever I'm looking for that sets the ideal up. This many times is the screen capture where it either hits a level I was reaching for or a level I'm trying to get in at. This is where you want to take a picture of it again. And this is why I don't do 28 pairs or a lot of different markets, because I'm only focusing on two things, cable and fiber. So it's very easy for me to dial in and get the screen capture of what I'm looking for. And then I don't share my chart with all the notations on it because there's a lot of things that I do in my own finances and in my own trading that I don't make public. So, but I do make references to the things I'm talking about here in terms of, okay, this is the run on the buy stops. So I'm right now, I would say I would have an expectation of seeing a strong reversal, and I would look for price to want to reach down into those wicks here and see how far we can go, and as far as that low here. And now we can start dropping down into a 4-hour chart and work into intraday price action. And we can see how noting areas of stops, because if we thought that price is going to go above these highs here, again, we give more details about what we're looking for, the time of day that this occurred, and how long of a time frame we would reasonably expect to see this move take place if we're going to run out this low. All those things you can add in all these open spaces on your chart. You want to make it personal. You want to make your journal and your charts something that's unique, that you're comfortable with, and it's something that you're really not aiming to share with anybody. It's comfortable for you to be able to look at, and it gives you all the information at the time, what you were thinking at the time the chart was creating the very setup that's being screen captured. Okay, dropping down to a 30-minute chart. Same mindset here. We're adding any details that we're noticing. Okay, and right here we have Monday's trading and the anticipated rally up. Once we see those types of things, we know that this is the setup, so we want to be a seller up here, but where are we going to be reaching for? What's the draw on price? So you want to have that before the trade really starts to unfold. As it's setting up, you want to get a screen capture, but at that time, you also want to outline what you're reaching for and what was the context behind why you would expect it to occur. We have an old low here. We got 20 and 10 pip grades of swing that would be expected to go below it. And here, just for the sake of keeping the chart neat, I'm just referencing 10 pips below that low. And on Monday, because I don't like to trade on Monday, I would like to use that Monday range and project it like the Power 3 study that was used that I taught you in the Asian session and or Power 3. And I would take that Monday range. If I'm bearish looking for that run, I'm going to take that range of Monday and apply it right on top of its daily high. And that gives me a projected range of 1 standard deviation, and we take that out in the future. It's approximately what Tuesday's high of the day is. So I know that I'm looking for a Judas swing, so how far will it go up? Well, it could go this far, which would take us right above that old high at 129.10, where it touched 3 times, and that's where the buy stops will be residing. So we're looking for a move above that, so it could be a seller right there. But before we do that, we have to remember, if this is in fact a bearish week, and this is the weekly high forming, this Judas swing is useful, and we can apply Power 3 concepts to it. We can get the range of the Judas swing and apply it in 1 standard deviation below the low. In other words, I'm taking this range and adding it, or in this case, subtracting it from this low and projecting it down, giving me 1 standard deviation. So we're seeing Power 3, which is accumulation, accumulate more, manipulation, run the stops, put them in buy side. We're going to see hopefully a move down with Power 3 with distribution and a final area of distribution down here. So we have 3 measurements of the actual Judas swing projected down, and that gives us just below that old low. So that validates this potential stop run while price was like this only. We don't have anything else happening yet. So we have Power 3 scaled out, accumulation, manipulation, and distribution framed before the move even occurs. You can see that 10 pips below this low is what we're looking for. So 10 pips below that, we're going to have a little level there. And now we see Wednesday's trading. And during the New York setup, we have a optimal trade entry form, and we can run projections on the fib. We can see there's a 400 extension overlapping exactly with one of the levels we've already arrived at. And then here's Wednesday, gives an optimal trade entry, short-term swing here, trades back up, optimal trade entry, short, sells off aggressively, and reaches down into our 10 pip sweep below the old low. And we're going to get a measurement from the highest body to the lowest body in these 2 price swings. And that projection down gives us exactly a 300 extension right there. And it actually gives you the low of the day, which actually overlaps with the approximate 10 pips swing below the old low. So we have several things being used here that I've given you in the recent teachings. Every one of these screen captures, you would write down any notation that would be necessary for you to have as a benefit. And that way, when you go to the end of the week, usually on Saturday morning for me, may not be Saturday for you, but I like to take about 30 minutes and go through the market and see what I didn't see and note that. But every day I'm writing down what my expectations are, what the daily high and low should be, and then I'm recording what actually happened. And it builds a lot of confidence seeing how many times I'm right. And when I'm wrong, even though I learned something from well, the time I was not accurate, it proves that I'm more right than I'm wrong. So therefore, I don't fear being wrong. And I use the times when I'm wrong to learn what it is I did wrong. So I'm taking no pain out of the experience. I'm looking at it as, okay, this is actually like a workout. Okay, I'm strengthening myself. I'm putting stress on my body with the attempt to make it stronger. Okay, so I don't look at adversities in trading as a defeat. I look at it as exercise and strengthening. Iron sharpens iron. So we can see how using the tools here, we get one more instance of this could be the very weekly low. Okay, if we trade through it, so be it. But if this is all I would ever get, that's fine, because this would be power 3 applied to the weekly range. Okay, and I apply that on the weekly Sunday opening vertical line if you hit Control Y, and I use the thickest trend line to draw right over top of that, and then I delete the actual Control Y line. And I draw out a little horizontal tick representing the open, and then I forecast where I think the close is going to be. And it doesn't have to be where it's actually going to close. I like to do that just to keep myself, entertained and trying to dial in as best I can for where I project the close. Sometimes I'm really accurate, and other times I'm not so accurate. But I'm more inclined to focus on what, if I'm bearish, what the high is going to be and how far of a reasonable objective, how low it can go. And if it keeps going lower, who cares? Long and short of it is I want to have an opportunity to get some kind of range of expansion. And on Wednesday, we can also see that there was no return back to that opening price on Sunday once it moved away from it on the New York session setup. We accelerated away from it. So there's a lot of things that took place in the dollar CAD this week that we have outlined before. They are hallmarks to the things I've taught you. And we did in fact run those equal highs out, as I mentioned in the higher time frame scenario and conditions video for this Forexmas set of videos for 2017. So hopefully you've enjoyed this presentation. If you'd like to find more, you can visit my website at theinnercircletrader.com.